In line with expectations, RBI did cut repo rate by 25 basis points, maintaining a neutral stance that it had introduced in the previous policy in February. Going forward, two commentaries that indicate that RBI may still want to remain in easing mode. One, they have lowered the inflation forecast for the first half of the fiscal 20 by 30 to 40 basis points to 2.9 to 3.2. And second, an articulation that the domestic economy is facing headwinds and may need policy support. So these two comments do seem to suggest that RBI may be open to further rate cuts. Of course, we are going to be riding two very critical events between now and the next policy. One would be the Monsoon Outlook and its actual performance. And secondly, more importantly, the election outcome. While most promises have been towards fiscal spending by a large margin, the actual delivery may be somewhat spread out over 2 to 3 years, indicating that there may not be necessarily a significant front loading of expenditure in fiscal 20. Perhaps that would also give an important direction and indication to the Reserve Bank of India in terms of the extent and magnitude of rate support that the economy needs to spur growth. Incidentally, RBI had revised its growth forecast lower by 20 basis points for the fiscal 20. To conclude, we believe that if the risks remain balanced and do not completely play out on the upside, the inflation does seem to suggest that it's likely to remain closer to 4 or tad below 4, which probably would suggest that RBI may cut as early as in June, and we would continue to remain data dependent to articulate going forward through our research as to what RBI is expected to do exactly in the next few policies.